All of the 11 meltdowns I mentioned in the crypto market, all 11 of those catastrophes have not stopped Bitcoin from functioning. It has survived them all. A year ago, all these things were kind of under the surface, and they've all kind of come to the surface in the last 12 months, and every one has been brutal. What's happened in the last 2 weeks? Massive Bitcoin rally. Why? Well, I think that
Hey guys, welcome back to Let's Talk Crypto. In the past few weeks, the collapse of some large institutions such as Silvergate, Silicon Valley Bank, Signature, and Credit Suisse bailout has been talked about extensively. But what's truly remarkable is how Bitcoin has performed throughout this situation. On a Twitter Spaces interview with Scott Melker, Michael Saylor shared his thoughts on whether the current Bitcoin surge is a technical move, traders trading, or a true flight to safety, with Bitcoin finally fulfilling its role as a store of value. Saylor believes that what we saw last year was a micro-crisis of confidence in the crypto industry, but what we're seeing now is a mainstream crisis of confidence in traditional financial assets, which is much larger in scale. He suggested that the way Bitcoin is perceived is changing drastically, not just within the crypto community, but also among mainstream investors. Let's listen to Michael Saylor as he shares his insights on the banking crisis and explains what's driving this Bitcoin rally. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
I think it's worthwhile just to think of this and everything that's happened in the past year. And I think you could summarize this as there has been a crisis of confidence in the crypto industry, a micro crisis of confidence in the industry that is about 1% of the world's money. And now there is a second act, which is a mainstream crisis of confidence in traditional financial assets that is all the world's money. So I think about crypto as a couple of $1 trillion, and the world's got $500 trillion of financial assets or more. Roll the clock back 12 months, and we'll just rifle through what's happened. One, we start with a crisis of confidence in crypto derivatives, and I call it the Terra Luna complex. That was a very complex derivative constructed, and it crashes. Two, you have a crisis of confidence in crypto banks like BlockFi and Celsius. People find out that maybe they're riskier than they thought they were, and they melt down. Three, there's a crisis of confidence in crypto hedge funds like Three Arrows. First Three Arrows, eventually Alameda. And we think these geniuses that are smartest guys in the room aren't supposed to anymore. Four, there's a crisis of confidence in crypto trading operations, OTC desks like Genesis. And people that are in the business of borrowing and lending out or rehypothecating Bitcoin or other crypto assets find themselves, again, on the wrong side of these trades, and they're wiped out. Five, there's a crisis of confidence in crypto exchanges. FTX is the most notable example of a meltdown, but generally there's just been massive pressure coming from the regulators on all the crypto exchanges, and we see the pressure placed on Coinbase, the pressure placed on Binance, et cetera, and that's created concerns, uncertainty. Six, crisis of confidence in crypto staking. You saw the SEC action against Kraken and the ETH staking pool, and Gensler has said staking is a security, and so there's a question of where does that sit. Seven, there's a crisis of confidence in crypto securities. Anything based on a proof of stake token. If you've got a set of founders that are economically interested, that have an excessive amount of either economic interest or governance control that's undisclosed, that is a risky place to be. There's crisis of confidence there. Eight, there's crisis of confidence in crypto settlement networks. Silvergate and Signature were the two major mainstream settlement networks. When Silvergate fails and Signature gets shut down, the question is, how do we settle on fiat rails? Big question mark. 9, crisis of confidence in cryptocurrencies. And here I refer to stable coins like BUSD. Obviously we see what happened there. It gets attacked. Custodia gets blocked. Circle, has the mishap with Silicon Valley Bank. Tether has been under pressure. 10, crisis of confidence in crypto regulators. People people don't have confidence in the regulators, right? On one hand, we know they're hostile. On the other hand, there is no framework for registering a digital exchange, a digital security, a digital token, a digital commodity. So even though there's the thought that, we just got to register, there's no way to register. And so there is no framework. And then there's stress and there's tension between the regulators, between the SEC, the CFTC. There's tension between the Department of Justice. There's tension between various regulators of different countries. Big question mark. And then 11, there's a crisis of confidence in the crypto lawmakers, the policymakers, right? There was a move to put forward legislation last year, like the Bozeman-Stabenow bill, and it just kind of imploded. And so crypto lobbyists, crypto lawmakers are all in disarray. That is the micro crisis of confidence in the crypto industry. And that's been playing out over 12 months. Now, that we all know that story, but I felt it was important to lay that out because the thing that's enveloping it right now is a mainstream crisis of confidence. And I think you could trace it, you could say the early sparks were last year. Late last year, the Bank of Japan lost the peg of 25 basis points on the 10-year Treasury. in Japan, and it floated up to 50 basis points. And that was like, that was a spark. And then we saw the 30, 40, 50-year long-dated bonds in the UK. They spiked up 100 basis points or more. Big UK bond meltdown, I guess, in Q4. And the result was the Chancellor of the Exchequer lasted a few days. The Prime Minister and the entire government fell a few days later. And so people were scratching their heads, but that was distant. That wasn't us. That was just on the island of Britain. So we saw that happen last year. That was the warning shot. Well, then Silvergate failed. And it's, when a bank fails, if you can just blame the executive team or scapegoat or say it's a one-off, it's it's because of incompetence of management or they were in the wrong business, then you can look the other way and there's no mass scare. But of course, after Silvergate failed, then Silicon Valley Bank, started to fail, and that created a bigger crisis. And that was sensitized. That sensitized, and I think it radicalized, if not engaged, all of the Silicon Valley tech VC community, and we saw them get very loud on Twitter. That actually escalated this thing, and then the shutdown of Silvergate, it accelerated the loss of confidence in the regulators, and it sort of says, it says that there's uncertainty here across the board, and it injected a slight dose of fear. I think the three in the hit parade of mainstream crisis of confidence is mid-sized banks, right? So the contagion spreads to mid-sized banks like FRC and the like, because they're all holding the same portfolios, and of course, at that point, people start asking the question, why are these banks in trouble? And so we actually see a crisis of confidence in bank accounting. Because the reason they're in trouble is because they're not marking to market their assets. If they're marking their assets to market, they all would have had to take every time the Fed raises interest rates 25 basis points, you're going to have a $50 billion write-off by the banks. And by the time you raise interest rates 300 or 400 basis points, you would have a $10 trillion, multi-trillion dollar write-off of banks. But because they've got the ability to hold these assets to maturity, they're not writing them out. So now we think, well, we don't really trust the banks, but we also don't trust the accounting. So the accounting of hold these to maturity says I don't have to market the market, but that doesn't work if there's a run on the bank and people just start to withdraw their deposits. So what you have in essence in rapid succession is a crisis of confidence in mortgage debt, in sovereign debt, and then just in the bond market in general. Right? How can you have confidence in any fixed income asset? And as I pointed out, that leads to a crisis of confidence in the bank accounting, and that leads to a crisis of confidence in central bank policy.
Saylor just explained the major confidence crisis that both crypto and traditional assets have been facing. But how does this explain the Bitcoin rally that we have seen in the past few weeks? Let's hear Michael's thoughts on this.
So there you go, a mainstream crisis of confidence in a $500+ trillion economy, a micro crisis of confidence in the crypto economy. A year ago, all these things were kind of under the surface, and they've all kind of come to the surface in the last 12 months, and every one of them has been brutal. What's happened in the last 2 weeks? Massive Bitcoin rally. Why? Well, I think that if you just put all that into your synthesizer and you say, what do I trust? What am I willing to invest my money in? Where's my safe haven with all this anxiety? And the safe haven is simple. It's Bitcoin the asset, Bitcoin the network. Right, those two things are your safe haven. Bitcoin, the asset, is the safest currency, the safest investment asset I can find because it lacks counterparty risk, and because all of the 11 meltdowns I mentioned in the crypto market, all 11 of those catastrophes have not stopped Bitcoin from functioning. It has survived them all. And so I sense in the crypto community, Scott, a grudging respect growing over the past 12 months for Bitcoin. If you roll the clock back 12 months ago, there are a lot of people that just, the trolls said, oh, it's boomer coin. I'm not going to say who, but many people said it will be irrelevant in 5 years. It's the last thing. It's aged tech. And I think that what they realized is that, when there's infinite money and the regulators are not active and the politicians aren't noticing you, then you can have a lot of fragile structures. We had a lot of fragile, overly complicated Rube Goldberg devices in the crypto industry, Terra Luna being the most famous example, that they kind of flew, and then as soon as there's pressure on them, you just realize they're unstable. They're too complicated. Maybe they're good ideas, but they're implemented in an unstable fashion or irresponsible fashion or non-compliant fashion. And when scrutiny comes to them, they're going to collapse. And all of the bankrupt entities, right? BlockFi was a good idea, but it was unstable. Celsius, unstable, right? All these things unstable. They all collapsed. But, in their defense, would be all fractional reserve banks, right? If you're collecting $100 billion in deposits that you have to deliver on 1 day notice back to the depositor or 1 hour notice, and if you're turning around and lending it out for 30 years and a fixed mortgage rate security, that was a bit fragile. And of course, if you went and you bought bonds with it that had a 10 or 20 year duration, that was also unstable. So what we're seeing is a lot of overly complicated schemes to generate yield collapse under this kind of stress. So I think people realize maybe Bitcoin's not such a bad idea, like no yield and no counterparty risk. And, Satoshi's not around to embarrass us, right? I mean, there's a point to this, which is if there's an attack, if there's an attack surface, whatever it is, whether it's a founding team, whether it's an entity, whether it's a corporation, whether it's a yield protocol, all these attack surfaces, if they can be attacked, they will be attacked. So I think that if the question is, why is Bitcoin rallying? The answer is, every other idea for investment seems like a pretty bad idea right now, Scott. And everybody that understands Bitcoin really well, that also had their money in altcoins or stable coins or other investment ideas, or if you're a crypto VC or you're a stable coin holder or you're a whatever, you're thinking, well, that is more risky than I thought it was, and it didn't work out as well as I thought it would. And so what do I know that I can run to in times of stress? It's Bitcoin. Worried about Tether. What am I going to do? I'm going to go back to old school. And old school was Bitcoin was a unit of account in the crypto economy, right? Tether and stablecoins made the US dollar the unit of account in the crypto economy. But I think we see people reverting back to Bitcoin as unit of account. Bitcoin is the reserve asset of the crypto ecosystem. Bitcoin is the safe haven asset, and this is being pounded into people's heads. So some of the money is the crypto assets that are looking for the safe haven. And as you get anxiety about everywhere else, you kind of run to Bitcoin because Bitcoin's not going to screw you. Bitcoin doesn't have a management team to take advantage of you, and it doesn't matter who you are. Don't trust me. You shouldn't trust any politician or any business person anywhere in the world. You should trust a protocol. The one thing I'm reasonably sure of, is that the number 9 will be interpreted to mean 9 by billions of people in a year. And the word love and the word hate will be interpreted to be love and hate by a billion English speakers in a year. And 1 BTC equals 1 BTC, and I can run my node. So the protocols are actually, people got bored with Bitcoin in the crypto world. And they started thinking, it's boring, I missed the boat. And they stopped appreciating the beauty and the simplicity of a protocol. And now I think they're rediscovering it. And I think you see that with the crypto entrepreneurs. I think you see that with Cointelegraph. I think you see that with CoinDesk. I think you see that on the cover of Bloomberg Crypto. I think you see that in the mainstream media. There's a grudging respect and an acknowledgement that maybe Bitcoin is not such a bad idea. Maybe Bitcoin is not boomer coin. Maybe Bitcoin is a good idea.
Saylor believes that Bitcoin is finally being recognized as a safe haven, and this Bitcoin rally is proof of that, as we're witnessing a flight to quality. What are your thoughts on Michael's view of the banking crisis and Bitcoin's reaction to it? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.